Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our interviews with successful real estate investors. Our guest today has been involved in over $350 million of real estate transactions. Before founding his company in 2015, he worked at Marcus and Millichap in the Brooklyn and Queens markets. John Cohen is co-founder of Toro Capital Partners. John, welcome to Purchase to Profits. It's great to have you on the show.
Thank you. Thank you for having me.
Yeah, you're very welcome. I'm really looking forward to this. So to kick things off, do you want to share with us your real estate goals right now?
So I think, right now, what we've been talking about internally, where the market is, it makes it challenging because, we have big vision. We want to be $1 billion real estate investment platform.
Nice.
That's the big goal, but where we are in the market, it makes getting there a little bit different. So I think the biggest goal for us internally right now is the execution of our current deals and building out our management team.
Yeah, no, that makes a lot of sense. And, you're not the first guy who's mentioned that, just where we are in terms of the market cycle. So have you kind of put any dollar volume goals or number of units closed goals kind of on the back burner for now? Is that kind of where you're at?
Yeah, I think I wouldn't say back burner. What we've done to be, I'm not going to say a little different because I think everybody's trying different things now. But the one thing that we've done is, we're trying to target more longer term owners, basically exclusively. So we still want to acquire, our goal, we have 7 markets that we're in right now. We're trying to acquire 1,500 to 2,500 units in each of these markets. But those are going to be coming from either distressed situations or long-term owners where we still feel that we can execute a value-add plan. So we're not necessarily going to stop going after our goals of being a $1 billion company, $1 billion investment platform, or an amount of units in a market. But more importantly to us right now is, making sure the deals that we go forward with are the deals and the places and the locations where we want to be. And then hopefully, still going after deals, chasing deals, making the contact, direct mail, cold calling. Hopefully that, that shakes loose enough and enough volume to, really, get to those number goals, whether it's amount of, how many doors or, total volume.
Yeah, for sure. So do you, as kind of the co-founder of the company, do you have any routines or rituals that you go through maybe daily or weekly that keeps you focused?
I would say the big thing now is just making sure I get, the mornings are important for me, right? I'm an early riser. I'm typically up, in around the 5 o'clock area. And, making sure I get a lot of the heavy lifting stuff out of the way as quickly as I can in the morning. And then it gives the rest of my day, lets things unwind the way they do. Cause if you sometimes you come in and the email's just crazy and then you get lost in your email or you can't get what you wanted to get accomplished. So I make sure in the morning is, my most productive time, that, I wake up, do what I got to do, get to the office and then, make sure that morning is, is there a day-to-day thing that I do every morning besides, go to the gym, little things like that? No. But whatever my big tasks are, I write them down the night before and make sure I do the hardest one or the most time-consuming one in the morning.
Yeah. And how has your day really changed from your sales career at Marcus and Millichap to now where you're on the investing side?
That's a good question. I think, for me personally, right now it's I'm not going to say just oversight because we're still doing the same things we did when we started. But there's some more, I would say, higher level tasks that, I'll delegate out and we're building our team internally now and making sure we bring on the right people that can handle those tasks and do them very well. And that's something that I've always excelled in, for any job I've had is the team underneath me, putting people and hiring people and putting them in the right position to make that task go a little bit smoother and give them sense of ownership on that task. So I would say the major difference there was, it was pounding the phones every day and meetings. Whereas now that's still part of the day, but the larger part of the day is making sure, all the deals are running smooth that we own, all the construction projects are on time, making sure the investors are happy. That's the bulk of it. And, whether I do, investor relations on Friday and asset management, every Monday morning, those tweak each week. But for the most part, the major difference now is making sure the ship's going forward as opposed to, going all over the place.
Yeah. And speaking of going all over the place, as you've been growing your company and your portfolio, have you gone on any maybe tangents or strategies that you thought would work and didn't pan out?
Yeah, we do it. We do it daily. So we're,
Yeah.
we've been opportunistic for sure.
Yeah.
Our bread and butter is value add multifamily. We've done a development; it did really well. So we've looked at some other unique opportunities. Luckily, we knew enough to not get involved in those where it's, hey, this one went really well, but this may not.
Yeah.
Some other things, we're slowly implementing. We did a fix and flip, didn't go the way, and I had that background, so I started doing fix and flips and tax deed purchases. We bought one recently, and the permitting process was a nightmare. And it did not go the way we wanted it to go. And would we do it again? Yeah. We just, we know the challenges we hit. Also we're buying distressed debt and mobile home parks. Those are two things that are high up our list in 2019 to sort of roll out that platform. But that being said, mobile home parks, it's been about a year and a half now, and it's been banging my head against the wall because I cannot shake that loose. But we're still, chugging forward. We're not going to give up yet.
Yeah. And you've mentioned team a couple times. Do you want to talk with us about the type of team you're looking to build and maybe the criteria you're using to determine who's a good person to bring on?
Yeah. So, I do, they have all, I've read a lot of things and I know companies that do personality tests and stuff like that. And I read it and I want to use those, but inevitably I'll go on instinct. It's done so well for me so far. But I also put a lot of, I'm not gonna say pressure, but I put a lot on the people that we're looking to bring in, and I let them, the cream rises to the top, and I'll give them some tasks and say, hey, you want to come on board? Hey, check this out, do this, read this book, check out this article, and I let them ask me questions. The better the questions, the more they pursue it. They take one leap forward, and I let them sort of fight amongst themselves without them even knowing about the competition. With that being said, our team, we have 4 people. We just brought on our 5th person recently. So we're not, we have a startup mentality where we keep it casual, fun, but at the same time, everyone knows that, we got to get stuff done. And yes, it's me and my partner at the top, but, we look to see how we can benefit anyone we bring on. That's a big thing. I want to know their goals, and I want to know that it aligns with ours, and I know I can get you there. And if all that goes together, it's an instinct feeling. And so far, we haven't let go of anyone we brought on, and everyone's really turned out really well. I'm really excited. I'm really excited about, what my visions are going forward.
Yeah. And lots of our viewers, they're involved in real estate, but maybe not at that larger scale. I do want to talk about how bringing people on has allowed you to grow your business more than just, you operating on your own.
Yeah. So there's some positives and some negatives.
All right.
Some days I feel like, if, one of the questions I always ask anyone that's looking at, do you want $1 billion company or, $1 million company? Because both of those can make the same amount of money. Yeah. It's just how much headaches you want and what you're looking to accomplish. And I like to work backwards. And yes, our goal is still to be $1 billion investment platform. But at the same time, especially when we're on the market, we're willing to take the pedal, the foot off the gas a little bit and, back into the deals we buy by the profits we want to make on them, whether it's a multifamily property for rental income or whether it's, a quick short-term, fix and flip. We say, okay, if we can't make X, we're not even going to involve. And that may hurt getting to $1 billion quicker, but I think over the long haul, it'll define what we go about doing and how we go about doing it. So the teams help because responsibilities get delegated. But at the same time, when something doesn't get done right, it just adds more work to your workload because you got to do it again or you got to do it differently or you got to take a second out to explain it maybe a little bit better. So there's the part that's great because it's allowed us to grow really well and really fast. And now we have a little bit more processes that we're still tweaking every day. But at the same time, part of me says, well, you know what? What would it look like if I just scaled back and did something, one-offs by myself? And sometimes I feel like it can go both ways. But in the end, I was a baseball player. I think you need a team. I think you need a team for sure. because it helps. It gives you a little bit more time to take off. I'm having my first kid in a month, so I know when that happens, I have people in the office that'll be able to take care of a lot of the stuff, and I don't have to necessarily be, on top of them. So it's amazing. I love it. But at the same time, I think that I recommend anybody, really work backwards on what you're looking to accomplish before you just dive in and, partner up and, all that stuff.
Yeah. You have no idea how much your life is going to change in about 1 month.
I know. It's people ask me if I'm ready or, what to expect. It's our first kid. If I say, listen, it is what it is. I can't change it now. So it's exciting and, we'll see. I'm welcoming the challenge.
Yeah, but buckle your seatbelt. You're in for quite a ride. I find it interesting because, some people I talk to, they're strictly, let's say, self-storage, or strictly multifamily, and you've taken a more opportunistic approach. Was that intentional in you kind of keeping your field wide open?
So it's funny. So I think that you have to be laser focused. And that was a Marcus Millichap philosophy, like dominate a space and be the best at it, right? Or even Apple's philosophy, right? If you dominate one piece of the market, even if it's only 5% of the market or 2% of the market, if you're an expert there, you're going to be the expert. And that was how we basically, Toro was 100% multifamily focused. Prior to multifamily, I did tax deeds. I did a couple fix and flips. So I had that experience. I didn't just throw it away. But we built our multifamily platform, and because where we're at in the market, and we're getting blown out on offers on multifamily property, it was, I'm not going to say it's an eat what you kill mindset, but if we didn't buy another multifamily deal this year, it wouldn't shock me. We have an 840 unit portfolio that we're closing on in the first quarter, so that's going to be a lot of our time. Yeah. But I know that if that's the only thing I'm looking for, and nothing comes. If I can't shake anything loose, well, what happens next? So as focused as we are, we're still not opposed to education. One thing I tell everybody, anyone that, asks me questions or, podcast listeners when they reach out to me, we're opportunistic. If you have an idea or an opportunity or something and it's interesting, we have no problem with making an investment behind an idea. If you can explain it to me, lay it out, and put a good business plan in front of us. Yes, we're a real estate firm. We're a real estate investment company, but we're not opposed to different ideas and taking advantage of the things. That comes from not only myself, but my partner. My partner's 53. He's got a little bit more experience than I do. And he's got some really, we have a really good group of investors that are willing to take flyers because of our past success. We've done well for them, so they trust us, and they put a lot of trust in what we do. Inevitably, we invest in real estate. We buy multifamily. That's our bread and butter. For us to go in a different sector or a different direction, it's got to blow the paper has to look really good, and we got to educate and get comfortable with that space. But in the end, we're not going to just put the blinders on, because I think you can get hung up, and if nothing's checking off those boxes, you end up getting frustrated and you may just give up. So I think that you have to get focused out of the box and know what you want to accomplish. But if it's not getting done, either find the right person to help you get it done, or, be a little exploratory.
Yeah, for sure. No, I think that's a really good point you've made, because, some people might get themselves with the blinders on, like you said, and not see the opportunities kind of just hiding in the periphery for them. Yep. So you've done a whole bunch of deals. Is there one that stands out as a keystone deal that really propelled you forward?
Yeah, our best deal. So our best deal was not the deal that definitely was, let's say, like the launching point, right? The best deal we did was a deal that we went in with. It was 3 investors. It was really clean, quick, and we planned on holding it forever. And the market just exploded, and we just executed it really well and got, I'm not going to say lucky, but the market helped take the returns from really good to, almost make believe. Yeah. But I think the deal that was the springboard was, it was the first deal I did that I got to the finish line. There's a lot of people out there that started buying properties not too long ago that have not gone full cycle. Mm-hmm. And, the first property I bought was in 2009. It's a single family house. And then I bought a couple tax deeds here and there. But the first multifamily property that I bought 100% on my own, not as a broker, none of that stuff, was in 2015. So I've only been doing it for 4 years, but what I was able to do on that deal was buy it, execute our business plan, have some hiccups, get over them, really learn, and sell it. So I was able to take a full case study and say, hey, we're going to replicate this over and over again. And I think that helped. I had investors that buy in because, hey, look, he's young. He did it on his own. He put all the pieces together, and we took that and we slowly built. And then I think the next critical part, obviously, was meeting my partner and doing 3 much larger deals with his help, his balance sheet, some money we raised collectively. Those 2 are the, probably the most critical pieces. It was meeting my partner and structuring that business, because without him, I don't think we're here today. Yeah. And then that first deal where I was able to take a deal full cycle, because even the best deal in the world, if you've never got it to the finish line, there's a huge part of the business that you haven't executed on the closing. And I think that's critical in what we do on the syndication or the multifamily investment platform, letting investors know that not only can we find, execute, manage, but we also can sell and return your capital.
Yeah. And you mentioned that multifamily one was your first one you had done at the time. Did you have any challenges in terms of getting financing because you were kind of new to that multifamily game?
So luckily for me, started at a time where banks were just throwing money at people, because it was, basically anything after 2009, 10, when the market crashed, 2012, it was still tough, 13, difficult, and then it started getting really, really easy. No, it was a small world. Actually, the mortgage broker that we were using on that opportunity just happened to be looking at a property for my grandfather. My grandfather had a ton of experience in real estate, and we were just shooting the shit. And he mentioned he was doing a loan in Jersey City, and he told me the property. I said, wait a second. Do you know Sal Burrito? And he said, yeah, how do you know? I said, that's my grandfather. He said, I have your bank. Don't worry about it.
Nice.
So because of the family and just small world, I was able to execute on it. Now, with that being said, I did bring on a partner who helped me with the balance sheet, who also invested about 1/6 the capital. And then my dad also co-signed the loan as well. He co-signed the loan as well because I didn't have the net worth or the liquidity to do it. So with my partner, who I still work with today on a lot of properties, and we still, we have some JVs together, and my dad basically having confidence that I knew what I was talking about, they both executed the loan, and it helped. But I did not have nearly as much trouble as some may think. And I even think today, in today's market, those are challenges that can easily be got, everyone can get over. I think finding the right opportunities is a hard one now.
Yeah, for sure. And you mentioned execution, how it made, the one deal from a good deal to an almost make-believe deal. Do you want to talk a little bit about what goes into executing properly on a deal?
Communication. You want to be almost to the point of annoying, because you don't want to get in their business so they can't work. You want to give them enough rope so that they're getting it done. But you want to have a very regimented, this is the asset management sheet. I need this report every month or every week. I need to have a call once a week. It was a construction project. It was a 60-unit property. I'm sorry, not a 60-unit property. It was an 80-unit property that we renovated every apartment and built a clubhouse. But just making sure that we had defined goals that everyone was meeting and communicating when something didn't go right or didn't go 100% according to plan. It wasn't just throwing the towel and panic. It was, wait a second, why didn't it? How can we correct this problem on the next one? And it was the communication and it was the team environment, giving the manager enough control to make her feel like she's part of the team, incentivizing the manager enough to execute the business plan, simultaneously, internally on the partnership side, making sure everyone was, the investors were okay with what was going on. They understood the challenges, and working everyone together. So I would just think it's open communication and not, say how you feel, ask the stupid question, it's not, you know what I mean? And, just making sure, that the lines are always open. If something's not going well, voice your opinion. Let me know now. If we have to tweak something, we'll tweak it. But communication is key.
Yeah, for sure. And as the market took off, and you're saying there, I think we might really outperform from our projections. Was selling definitely in your mind, or were you considering like a refi at some point, maybe keeping it?
So we did. Part of the reason why we didn't refi it is because the sale price was so high that the new loan would have hamstring the cash flow. It would have just been so not leveraged because the value was there, but the income, we would have gotten out a lot of money, but now the property almost becomes a liability because it's a little bit more risky. With that being said, there was 2 partners in the deal. So there was 3 investors collectively, me and 2 partners, 2 managing. There was 3 managing members. They wanted that to be their baby. They're older. One guy's a little older. One guy's a little bit older than that. They wanted that to be their baby, their little diamond in the rough, cash flow property, off to retirement. Me, on the other hand, I said, guys, we're opportunistically, it'd be foolish not to sell this because I don't know if we're ever going to get this again. Yeah. So and I do this frequently and I do it all the time. I'll never tell someone no. I'll tell you how I feel and what I believe, but I try and steer the decision so that it feels like they made the decision themselves. So out of the box, I know they would talk without me on the phone and they would say, we're going to refi, but I would throw in little things here. Oh, look what this sold for. And, we could 1031 into this, and I would let it go its own way. And then finally, we got BPOs and they looked at the number on the paper and they're like, yeah, we got to get rid of this. Like that, it's just too big of a profit. So, I'll tell people what I feel. I'll tell them what I believe. But inevitably, what I think works best is, let them come to their own decision with my help. And we looked at all the options. It just, we took that deal. We 1031'd it into 2 properties. One, we plan on holding it for a long term. And then the other one is another fix and flip type. It's a 122 unit that we're definitely going to get, we're trying to get out of. It was another huge renovation project. So we were able to take that one property that was supposed to be the set it and forget it, buy one much newer construction, and buy a heavy lift. So we got the best of both worlds. And I think that inevitably it's going to turn out to be, really good decisions, unanimously.
For sure. So hey, how many more home runs do you think you'll hit in the next couple of years?
That's a great question. I don't know. We have some deals right now that we're wrapping up that we're going to bring to market this year that, look to be right now really, really, they're going to be good too. They're going to be great. I think what's allowed us to do that, and something that's, number one written on our wall is, buy it right. That's how you hit your home run, right? You can time a market great. There's luck behind that. You can read all the reports and the ups and downs and all the graphs. That's great. But you don't have to time a market way early on and sell it at the peak, because there's times to sell throughout the whole time. There's times to buy throughout the whole way. The one thing that we do that we won't bend on is our basis, especially in today's market. That's where you're going to hit your home run, is buying the property right at a good basis. How many more do I think we have left? I think we have a lot, because we're rolling out some really cool off-market strategies right now that I'm a huge believer in. I did it at Marcus and Millichap. It's how I built basically the whole business. And I think they're really going to shake some really good deals loose. But if I looked in the mirror when no one was around, I think we're at the top of the market. So I think we're telling investors now, hang in there for the long term. We're going to hit some singles and doubles. And then opportunistically, if the right time comes to sell, we're going to execute it. So we have a lot left in the tank, that's for sure. But at the same time, we know that we're coming into the late innings where, a base hit, is going to do just as well where we are today.
Yeah. And are you trying to build up your war chest right now for once the conditions do kind of deteriorate?
You nailed it. I got lunch with a very good friend of mine last week, and that's what we said. It's right now, any deal we sell, we'll 1031 if the perfect opportunity exists. But if not, I'll pay my taxes. I'll take my consequence, and I'm going to build a war chest of cash and investors to know. And when the time comes and it's, hey, guys, I'm telling you this is the one, we are definitely building up our war chest right now. We're going to hang tight. And when the time comes, we're excited that we're going to be able to pass. And that is for sure, I think unanimous. I don't think I'm the only one with that idea, but, I know going into this side of the market, we'll be able to execute really well. I'd be lying if I say there wasn't part of me that says, downturn, when is it going to happen? But my fingers crossed. Yeah. But at the same time, we are, we're excited about, where we're at and what's going forward. And we're definitely building up a war chest.
Yeah, that's great. And so do you want to tell us how getting into real estate on the investing side has really changed your life over on the selling side?
Oh, yeah. I mean, you're only as good as your last deal as a broker.
Yeah.
Not saying that being brokers, a bad job, a good job, indifferent. On the investment side, I have built a business, successfully sold deals that allowed me to take that capital and reinvest it into the deals. So now if we never did another deal, I still have money coming in where I can still hang in there, let my money go to work for me, not foolishly buy something because I have to. And then on, as the flip side to the you're only as good as your last transaction. If you work for someone, you're only as good as what you've done for them lately. If something goes sideways, you may be left with nothing. And I would say what it's done for me is it's really set me up to, have a very comfortable, comfortable is relative, right? Some people comfortable is billions and some people it's, 100,000 or 50,000. It's allowed me to be very, 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 comfortable in my personal, what I like. And I know that bills are getting paid and I don't have to do a thing to at least, get through this next downturn whenever it may come.
Yeah. Are you taking a couple months off once the baby comes?
I am. Not full-time off, but I would say we're, not going to the properties that, my partner's going to do that. But for the most part, I'll, I said, probably not coming into the office on Fridays and Mondays and take a little time and do what I got to do.
Yeah, no, for sure. You'll be a diaper changing pro in no time. That's great. So John, where can people find you if they're looking for some more information?
Yeah, I would say the best way, our website, Toro, Toro, REP.com. Contact information's on there. My email address, which I know you have more than, if you put it on the bottom, email address, that's the best way to reach me. Shoot me an email. I'll typically respond within 24, 48 hours. I'll probably respond with my cell phone. Just, I'm the easiest person to have a conversation with. I'm willing to look, anything I can do to help someone and give back. I think that's, that's how we run our business. If I can add value to you and do something to help you further your career, if there's an introduction anyone needs, don't hesitate to ask. Reach out to me. Shoot me an email. Tell me, where you heard me, or what it is, or if you have a question, and I will definitely get back to them. And anything I can do to help.
Sounds good. Well, John, just want to say thanks so much for taking the time and sharing your real estate success with us.
No, thank you. It was, obviously I had a pleasure. It was a blast, and let's continue the conversations.
Sounds good. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.